Good morning, good evening, good afternoon, traders. Thank you so much for joining us here at TradeDelicious. We're super excited to bring you another piece of educational content. We hope you get a kick out of it. Let's jump right into it. We're talking about retail sales. Now, what is the retail sales report? The Advanced Monthly Retail Survey, otherwise known as MARTS, aka retail sales, is a survey measuring the strength of retail trade activity in the US of A. Now, this measures not only the total figure, the total sales in retail and food services, it also measures the month-to-month change in retail and food service sales. This report is generated from, give or take, 4,800 firms that are surveyed across 13 retail sectors. This covers everything from food services to electronic stores, right? And this data comes directly from the U.S. Census Bureau, so this is something that we can trust. Now, keep in mind, there's a lot that's incorporated into this report. Of course, you have the headline figure, like always. You have a percent change, like always, but you also have analysis from the economists that are putting together these numbers. Now, keep in mind, when we're talking about retail sales, it's not the biggest mover in GDP. I'd be lying to you if I said it was. It only represents about 6% of GDP here in the States. But it's not that 6% that's important. It's 68%. What do I mean by that? Retail sales is a leading indicator for consumer spending. As retail sales go up, usually consumer spending goes along with it. These are purchases that are made at Home Depot, purchases that are made at J. Crew, Abercrombie and Finch and such. These are just a collection of retailers, clothing stores, building stores, gas stations. As all of these things continually accumulate sales, we expect consumer spending to reflect that. And consumer spending represents over 2/3 of GDP here in the States, as well as countless other countries. It's a very, very large indicator of the strength of a particular economy. Talking about the headline figure for retail sales specifically, it's super simple. We have, of course, the total sales, which remember is an estimate. These are the advanced monthly sales as you see above. You also have the percent change relative to the last month, and then you have last month's revised data. This is a key point. The data that you're seeing for the last month is always going to be revised versus the month that we're looking at because this is an estimate. So large institutions, large countries that are stepping in to make trades on the dollar, for example, will use this as an indicator of the strength of the economy here in the States, and they might readjust their positions based on if there was an expectation, for example, of 686 billion. That was the number that was printed in advanced monthly sales, and then it was revised to say, we were a little off. Maybe it was 683.2, and these revisions play a very large role in the minds of these long-term investors, whether they be nations or institutions. Keep that in mind, that positions change based on these numbers. Of course, we have last month's revised data, as I said. The next scheduled release pops up here, so you always know when it's happening. And we also have some additional data from analysts and some hot takes, if we might say. Now, keep in mind that analyst expectations account for wider volatility during holiday seasons. So, Christmas, December retail sales, it's going to look very different than, say, March retail sales because you have a big holiday. People are going to be spending a lot of money during December, so we expect that figure to print in a more volatile fashion. We might have an expectation of 686 and see 700 billion, right? And that's something that economists and analysts keep in mind as they're creating these expectations. Now, moving on from there, we have three major areas of focus with the retail sales report. Of course, we have the headline. That's what all traders care about. That's the thing that prints. And whether you're a swing trader, a long-term investor, a day trader, or a scalper, that number could potentially affect your trade. 8:30 a.m. Eastern Standard Time is usually when it pops out. You usually don't want to be in trade if you're day trading during that time, right? But there are some other areas. We also have the control group, as well as the X-Auto and gas groups that are reported within this retail sales report. All these things do is help to smooth out the data that we're taking a look at. So obviously, there are some components of retail sales that are a little bit more volatile than others. The most volatile of those are those that you see here in these control groups, in these X auto and gas groups. Those being cars and gas. When an economy is doing really well, usually you would see gas prices hopefully be low and car sales be high. But there are so many things at play. Right now, we're in the middle of a war between Russia and Ukraine. That's going to change the gas price outlook. OPEC just said that Saudi Arabia is pushing to cut 1 million barrels per day within 30 days. That's going to cause a change in the prices of oil. The U.S. government's going to step in and buy more oil for the strategic reserves down in Oklahoma. That's going to change the price of oil. All of these volatile items are things that some traders, some investors want to see removed so that they can see smoother data and see something with a clearer curve. So keep that in mind as we're trading, because there's so much that goes into this. And a lot of investors, a lot of nations even, are looking at different components of this report. Now, how do you analyze it? Well, the interpretation of the data really depends on the current economic conditions. In 2020, you want to see retail sales go up, especially after March when everything went so ballistic. You would really want to see retail sales go up as a sign that the economy is recovering. In 2023, maybe that's not the case. The Federal Reserve is fighting inflation super aggressively, and they want to see retail sales fall. Why? Well, as retail sales goes up, as I said, consumer spending goes up. As consumer spending goes up, inflation goes with it. Remember that all data is revised toward the end of the month, so we do see some positional changes happening at that time. The data often results in longer-term position changes for large institutions and nations, as we've been talking about throughout this presentation. Now, obviously, economies tend to grow as consumer spending grows, so a growing retail sales in most conditions is good. It's used as an important indicator as to whether or not economies are expanding or contracting. If the advanced retail sales number or the monthly advanced retail sales survey comes out bullish, equity traders could cash in on large retail names. Home Depot, for example, would be a great buy, potentially. If the figure comes out weak, bond traders could potentially swing the 10-year yield up to the upside. There are a lot of different ways that you could take advantage of a report like this. In 2023, as I said, growth in any sales means inflation rises, means the Federal Reserve may act by raising interest rates, which would potentially further hurt retail sales as people have less money, people lose jobs, and lending becomes more expensive for businesses, so everyone tightens their wallet. Remember, as always, with any of these reports, everything is a part of a much larger whole. Never just look at the headline figure and trade off of that. Remember where you are in your time, in your space, in your country, in your economy. All these things play an incredibly important role. Really all I got for you. Thank you so much for joining us here at TradeDelicious. We hope you got a kick out of it. As always, please trade well and trade delicious. Hope you have a good one. I'll see you.